Hi, I'm Jenny Brown and welcome to our weekly buy-to-let market update. I hope everybody is keeping really well. So look, I'm in the office. I made it in for 3 whole days before we go back into lockdown tomorrow. It's been absolutely lovely to come in and see everybody actually. I think I won't be alone in saying that working from home could be quite isolating. So it has been really nice to come in and see some of my colleagues and some friendly faces before I go back home. We're all stuck back indoors for another month at least. So look, in terms of the lockdown, I'm going to talk to you a little bit more about how this is going to impact you from a mortgage perspective. But before I do that, I just want to run through some changes that we've seen from the lenders over the last week, and there has been quite a lot. So first of all, we've seen Accord Mortgages streamline their product range. They originally had 57 products. They've condensed this down to 22. Nothing to be read into this. They're simply just looking to simplify what they have on offer. 57 is a large number of products by any stretch of the imagination, and 22 still remains a significant number of products on offer. So great to see them just looking to simplify things and make everything a little bit easier for everybody. We've also seen foundation home loans reprice with rates moving upwards. This is going to be a move which is largely in reaction to the sheer number of cases or applications they're receiving. We spoke a bit about foundation home loans a couple of weeks ago, where they launched some very good products aimed at professional landlords, HMOs, multi-units, limited companies, that end of the market, which were very good, and they've been awash with applications, so they're just repricing to try and slow things down a little bit. We've also seen West Bromwich withdraw a range of products from their product set. They have got products remaining at 75% loan to value, which are still very good, but they've removed around 6 products, I think it is, from the previous product set available. Now, West Bromwich are a lender who lend only to limited companies. They don't do any individual lending whatsoever. And the reason we really like them is that they don't take personal guarantees when lending to limited companies. And their products have been very competitive. And actually, despite the fact they are removing a large share of their products, actually what is left over is still very good, with limited company pricing starting at 3.14% for a 2-year fix. So yeah, it's not disastrous by any stretch of the imagination. We've seen Gatehouse Bank halve the number of products that they have available, and we've also seen the Furness withdraw all of their limited company and holiday let products. They've stated this is a temporary measure just to allow them time to catch up on the number of applications they've got in their pipeline. They've clearly been overrun with new business, and so they're just putting a pause on applications in that space for the time being, just to allow them time to get on top of things. Metro Bank have withdrawn all of their 60% loan to value products. They still have products available at 75% loan to value. And we've also seen Vida Home Loans increase their minimum loan size to £100,000. And again, these changes will be purely lenders looking to slow down business volumes where they're so busy at the moment. I think it's fair to say that it's not just a concern about how busy they are, but also with the lockdown coming in again and people not able to come into the office, that will impact the ability for some lenders' staff to work as efficiently as they can do when they're actually in the office. And so I guess lenders are also being quite mindful that not only have they got a large number of applications already in, but with the lockdown coming into force, it will mean that actually the efficiency may slow down a bit further. So they're just looking to make sure that they don't totally collapse under the weight of workload. The good news that we have had in the last week is that we've seen Paragon re-enter the student letting market. Now, Paragon are a lender who are absolutely brilliant at student lets and HMOs. They've been in that space for as long as I've worked at Mortgages for Business, which is around 15 years, and since before that. So it was a real shame when they decided to put a pause on lending on the student lets. Understandably, they had real concerns around the student letting market when we went into lockdown and the students came home, and no one really understood when they'd be going back to university. But thankfully, as we've talked about previously, the students have gone back. Actually, a lot of them went back early, obviously desperate to get back away from their families, and I'm sure their families are also very glad to see them go back as well. So Paragon are now very comfortable that the student letting market is holding firm, as they've opened their doors to that part of the industry. Now, in terms of Paragon's offering, one of the things that I really like about them is that they're able to lend on large HMOs on normal buy-to-let pricing. So they can lend on HMOs of up to 20 rooms, and also HMOs of up to 20, multi-units of up to 20 individual units as well. But they do these really much larger HMOs on buy-to-let pricing, so really, really competitive. So just delighted to see them back in this space. So moving on to lockdown and what this is going to mean for the mortgage industry. So first of all, I think it's really important to say that actually in terms of abilities to apply for mortgages, actually nothing should really change. So earlier in the week, Robert Jenrick tweeted that renters and home movers are still going to be able to move. Removal firms and estate agents can continue to operate. The construction sites can and should continue. Tradespeople can enter homes, all with the caveat that everyone should be following COVID safety guidance. So in terms of how this impacts the mortgage application process, the valuers can still go out to properties. So realistically, nothing should really change, if I'm honest with you. I don't want to appear flippant about lockdown because I appreciate that this is going to impact many people. But actually from a mortgage perspective, the really good news is that things should continue to carry on as normal. And at Mortgages for Business, apart from obviously our staff having to be based at home every day, actually for us it's very much business as usual. Now, the other piece of COVID news that came out in the last week was that the mortgage payment holiday facility, or as we prefer to call it, mortgage payment deferral facility, is going to be extended to 6 months. Now, what this means is that you can have a total of 6 months payment deferrals on your mortgages. If you have already had 3 months, that means you can have up to another 3 months. If you've taken no mortgage payment deferrals, then in theory you can have 6 months. If you've already had 6 months, then unfortunately that's your lot. Now, it's really great that the industry is continuing to want to support borrowers going forwards as we go into this next phase of lockdown. But I think it's really important to also just mention the impact of these mortgage payment deferrals because, when these were originally announced back in the spring, the message was very much this will not impact your credit rating. And that's absolutely right. These mortgage payment deferrals do not register as missed mortgage payments on your credit file. However, what you will find is that when you apply for mortgages at the moment, lenders are asking questions about whether you've taken mortgage payment deferrals. If you have taken them, they're going to be asking more questions around your financial position now to make sure that you're not in any trouble. Indeed, some lenders are saying actually if you did take a mortgage payment deferral, we're not going to lend to you for X period of time going forwards, because by taking a mortgage payment deferral, obviously what you've implied is that you are unable to meet your financial obligations. So it's really good news that these are being made available for people going forwards. Obviously, they're there for a purpose and it's really to be applauded. But if you are thinking about taking one of these, please do, proceed with caution. One question we get asked quite a lot is, how would a lender even know that I've taken a mortgage payment deferral if it's not showing as a missed payment on my credit file? Which is a very good question. And I think it's just probably worth explaining to you briefly how this works. So when you look at your credit file, that you'll see that if any debts that you have an outstanding balance apportioned to them. And when you take a mortgage payment deferral for 1 month, the interest that you haven't paid simply gets added onto the debt. So what the lenders will see is not necessarily a missed mortgage payment, but what they will see is the amount that you owe has increased month on month for every month that you've taken the payment deferral. So whilst it doesn't show as a missed payment, they can see that you have actually taken it. So great news that it's available, but also just know that it needs to be taken with some caution. And if you do have any questions on that, it's probably worth just giving us a call to chat through how this will impact you going forwards. There is also some talk about the financial watchdog considering payment deferrals on loans and credit cards as well. Nothing further has been announced on that just yet. My understanding actually was that loans and credit card companies had made payment deferrals available previously. So I'm expecting that actually what this is referring to is more the extension of up to 6 months rather than them being introduced at all, because they were made available from the beginning, to my knowledge. So there you go. That is us for this week. A very quick update for you, which I hope you find helpful. We appreciate that, going forward, we're in for a lot of worrying few weeks ahead of us. So if you do have any questions around your mortgages, ability to make payments, how you can look at your finances to shore things up, please do give us a call. We're always very, very happy to have a chat and just shoot the breeze with you and figure out if there's anything we can do to, put you in a stronger position financially, 0345 345 6788, or have a look at our website mortgagesforbusiness.co.uk. So until next week, where I'll be broadcasting from home and my new office, which I'm very excited to show you, look after yourselves.